This week, Tim Cook made his way to the White House and promised $100 billion and promptly added over $400 billion to the company's market cap. Tesla is seeing its sales across the world decline, but shares continue to climb higher. What is going on over at Tesla? And the president announced a 100% tariff on semiconductors, but basically every semiconductor stock moving even higher. We are in bizarro world when it comes to big tech, and we've got a lot to talk about. What is going on, investors? Hopefully guys are doing well out there. It's been an exciting week post earnings, and we'll kick things off like we always do with Meta Platforms. Start of the week at 763. This one drifting just sideways as it's digesting the large move it made after earnings. Shares of Meta still up a nearly 7% just over the past month. Now, the company is seeking financing for a new data center project. This will be $29 billion in finance. I saw this get kicked around online, and that is because when we looked at the company's financials, this was a couple of weeks ago, when the company reported earnings, just a fantastic quarter, $25 billion of operating cash flow. Now, they have still not ramped up all their property, plant, and equipment, which is CapEx spent on data centers. And in the most recent quarter, they doubled it over the previous year from $8 billion up to $16 billion. So from a free cash flow perspective, in the quarter, you generated $9 billion. But my goodness, you're paying $10 billion in buybacks. You even have a dividend as well. So for this company to maintain the dividend base and, more importantly, the buyback, yeah, it's going to have to finance that unless it wants to dip into its cash balance sheet. Right now, the market is rewarding companies like Meta for aggressively spending on CapEx. Shares are just absolutely more or less at an all-time high. Will this continue? And that's the discussion we'll have through the rest of this year and likely into 2026 as well. Now, one company that's not committing a lot of CapEx as it relates to data centers and AI is actually Apple, and it's finally seen a bid underneath its stock as shares of Apple up nearly 12% this week with a $3 trillion market cap. That's way over $300 billion added to Apple just this week. This is after the company committed an extra $100 billion to increase its United States investment in terms of its supply chain. Now, I saw this get kicked around on social media. I saw it get kicked around on financial media, which tends to be, a little bit liberal. I'm sure if you were watching the conservative newsletters or the conservative news networks, they probably were going to, they were touting, oh my gosh, Trump is bringing iPhone manufacturing or bringing Apple to America or whatever. And then on the liberal news media, they were like, well, Apple was going to do this anyways. It's always somewhere in between. Company is committing, I believe, $400 or $500 billion into the United States. I think the mistake that some people are making is they are thinking that Apple is going to reach into their pocket and pull out $600 billion. And when they look at Apple's financials and they're seeing CapEx over the past year, maybe $30 or $40 billion. This is like 10 years of CapEx. That's not what Apple is committing here. They are committing to buying $600 billion worth of stuff from United States manufacturers, including the glass and other manufactured parts here in the United States. They're also going to invest in bringing other types of talent and other types of manufacturing capabilities here to the United States. So this isn't just factories and these types of things. It's literally the purchase orders of the parts that they were going to make anyways, because this is a company on about $100 billion a run rate quarter in terms of its sales. Obviously, a portion of that comes from services, but this company generates 60, 70, $80 billion in sales every quarter from just the plastic and glass that it sells for its phones and its laptops. So it's including those parts inside of this quote unquote investment. Now, what it's also doing is getting President Trump off their back a little bit as they were facing tariffs in India, obviously China as well. And this could carve out an exemption and keep those iPhones at the price that we're probably paying, or a similar one we're paying now. Wells Fargo supporting this, saying this is all about a tariff exemption. Company announcing $100 billion that they were going to spend anyways on some of these parts. Yes, they're expanding some manufacturing of the glass, and they'll likely continue to invest in terms of Taiwan Semiconductor's ability to make the chips that go into the phones and the laptops here in the United States. My understanding that's already happening, and maybe you can get other chips made by Broadcom and Micron and other companies made right here in the United States. Now, Samsung looks like they're investing heavily in the state of Texas, as last week Elon Musk announced that he was going to spend about $16.5 billion to get supply from Samsung Electronics' new Texas factory. Apple signing up as well to get some chips out of there. Moving on to Amazon. Start of the week at 214. This stock moving higher by about 3.6%. Finished the week at 222. This as the company has these robo-taxi autonomous vehicles ambitions in their Zoox unit, and they were granted a key exemption from certain safety standards. This is because the cars don't contain brake pedals or a steering wheel. We would assume the same exemption could potentially apply to Tesla later on when they roll out what they call the Cyber Cab. This also marks one of the first times that this has actually happened from the government agency NHTSA. So this is certainly an advancement, not only for Zoox and Amazon, but the self-driving business altogether. Speaking of cars and Amazon, they are expanding their partnership with Hyundai that allows customers to buy Hyundai vehicles directly on Amazon. If you did not already know this, I was actually at CES, and Amazon has a big presence in multiple areas of CES. It spans like most of the like major Las Vegas hotels. They have kind of a main booth, kind of the consumer side is on the Venetian, but then in the main CES convention center, they actually have an automotive section that's really, really big. And they were showing this off, and at the time it was just kind of pilot, and then it rolled out, I believe, right at the first of the year. You could literally just get on Amazon and shop for a Hyundai. I even had one stored in my cart for a while. It was like, do you want to check out and buy this $40,000 Hyundai? So Amazon putting a lot of effort into there. They're doing used vehicles as well. That's part of the pipeline. And my guess is you're going to have other manufacturers sign up for this as a direct-to-consumer model. Probably decent enough. Now, obviously, I say direct to consumer. They actually direct you to a dealership to go pick up your car, and I'm sure the dealer networks are looped in here as well. Now, company had this Wondery service, which was mainly podcasts and those types of things. It had attracted some large name talent, including LeBron James, Jason and Travis Kelce, Monica Lewinsky, among others. Think of it as kind of a poor man's Spotify, if you will. There were rumors earlier in the week that they planned to close this unit, but instead they plan to split it in two. At least that's according to TechCrunch. Moving on to Netflix. Start of the week at 1173. This one drifting higher by about 3%, reversing several days and weeks of losses. Finished the week at 1210. Not a lot of news out of Netflix. Moving on to Nvidia. Start of the week at $176 per share, and on a week where there was 100% tariffs announced by the president. Shares of Nvidia climbing by 3.5%, finished the week at 182, just, pennies away from an all-time high. And like I said, you now have 100% chip tariffs. I don't think these are in place. Also, there was like a huge asterisk on this. Devil's always in the details as it relates to anything as it relates to President Trump. You can carve out an exemption if you manufacture or commit to manufacturing here in the United States. And we obviously know with Taiwan Semiconductor building a massive facility in Arizona, and they've done a brilliant job scaling that up. In fact, they're ahead of schedule across the board, ahead of schedule delivering chips out of that plant, ahead of schedule building the next facility. So they're seeing huge success. And then also, if you read through on the conference calls, it's actually done at a price that is, I wouldn't say it's as cheap as what they get out of their Taiwan facility, but it's not dramatically more expensive. There was always this belief, you can't build stuff here in America. You certainly as hell can't build semiconductors because it's too complicated and it would be too expensive. That's not the case. It's not the case at all. Now, some of it had to do with government subsidies and all those types of things and potentially tax breaks and all of that. But it's not cheap to make these anywhere in the world. And here in America is actually somewhat competitive. And then when you look at the corporate tax rate here in North America, that has trickled down as well. That's a big driver of driving down cost. And that is making manufacturing here in the United States far more viable. Foxconn trying to jump on the train of AI server assembly as they plan a plant here in the United States. this as the company is selling an electric vehicle plant in Ohio. We'll have a story on who bought that later on for $375 million. So I love how Foxconn comes to America when EVs were probably red hot. They buy a big plant in Ohio, plan to assembly and make these things, and then they're getting out of that business and getting into AI server assembly. So could this potentially be the top in AI server assembly? We'll find out in maybe a year or two. My guess is we're getting to that point, or at least getting to the point where it plateaus. AI server assembly, I think you saw the results out of Supermicro. Terrible business, low margin, wouldn't want to be in it. Now, another thing I wouldn't want to be in trouble with is the United States selling H100 GPUs, which are banned from being exported into the great country of China. Chinese nationals operating out of California now face 20 years for illegally shipping tens of millions of dollars worth of Nvidia H100s to China without a proper license. That's probably not going to go well for them. Moving on to Google, start of the week at, we'll call it 192. This one just drifting higher, headed into a DOJ recommendation or verdict on what they should do in terms of antitrust, up 4.7% to top $200 for the first time in a while. This all comes as these AI giants, OpenAI, Google, Anthropic, and others are cozying up to government agencies. And when we get to the Microsoft segment, we'll show you that OpenAI essentially offering its services to the government for $1. We're seeing a trend among software where government contracts are being compressed. And so Doge kind of exposed potentially maybe some government waste there. And I think with President Trump leverage over some of these companies, he's like, hey, we're not going to pay full price for your software. You're basically going to have to give it to us for free. Now, a full-blown capitalist might have a problem with that. I don't really have a major problem with that. If these companies want to operate here in America, maybe part of the agreement is that you offer your services to the government for a very, very fair price, if not for free. Now, this is putting pressure on the broader sector. You looked at shares of ServiceNow and Salesforce and others. They saw their valuations compress. It also hit cybersecurity as well, as you're going to have this compression in the government side of contracts. So anybody exposed to government and selling a lot of software into government, they're going to see compression there, and that's something that's going to shake out over the next year or so. Moving on to Microsoft, start of the week at 532. This one in reverse because it sells a lot of software to the government, down about 2% finished week at 522. This all comes as OpenAI launched what it's calling its smartest AI system yet, GPT-5. They really streamlined, if you go to like chatgpt.com, I think just visually it looks better. I know we're like talking about weird stuff here, but sometimes the visuals do make a lot of sense, and they're starting to pay attention to those fine details. This also broadly rolled out to all users, which is not something that we've seen in the past. Sam Altman making a joke on X that he could smell silicon burning, and that's certainly music to the ears of anybody that is investing in the semiconductor business. Among the tech dork community, and I say that very affectionately because I'm one of them, it wasn't a blow away type model where it was leaps and bounds above anything else. But one thing to keep in mind is GPT-5 not fully developed on the Blackwell system. We probably won't see those until later this year at the earliest. And so what we're seeing is a continued incremental step up in terms of AI capabilities. The dramatic further increases will likely come as you move into next year. Elon Musk quipping on X that OpenAI is going to, quote, eat Microsoft's lunch. Not exactly sure what he meant by that. And then Satya Nadella very casually quipping back that he's still waiting for open source models from X. As I discussed during Google, is a lot of these enterprise software companies are offering the software to U.S. federal agencies for just $1 per year. As again, we're going to see a compression in terms of software prices in what the government is paying over the next couple of years. Now, the company is exploring a share sale for $500 billion valuation. Some of this could be in response that you have major poaching of talent and $100 billion offers from companies like Meta. This is one way to give the employees currently a little bit of liquidity, a little bit of because they're seeing their ex-employees go off to Meta and then they cruise up in a Ferrari, and instead of living in the poor neighborhoods of Palo Alto, they move to the rich neighborhoods, which is, if you ever been to Palo Alto, pretty much the whole town. But you know what I mean. they're seeing their old employees go off and do startup companies as well, where they're raising like $10 billion and they don't even have a product yet. And so this is a way to retain talent. And it'll be interesting to see the valuation they're able to get, and also any types of financials and information that leaks from those fundraisers. Now, the company did release a pair of open reasoning models. This is open source, and these were interesting. These have implications for down the road because you can launch these models and run these models on a high-end desktop or laptop powered by Nvidia's H100 GPU or better. This is a step in the right direction for the robotics industry, as well as you're going to want to run at least some version of a large language model locally on the actual robot itself. Yes, it'll be able to pull from the cloud, but in remote environments or when there's latency involved. I sure as heck don't want a robot operating on me and then all of a sudden the internet to glitch a little bit, and then all of a sudden he glitches as he's giving me some type of open heart surgery or the like. So you are going to want to run these things locally as that becomes more and more important. My guess is you're going to be able to compress these models even further, and then moving into next year, this will become a big story. Now, SoftBank acknowledged that the Stargate project that it's committed hundreds of billions of dollars to is going to require more time. I don't think this comes as a surprise to anybody. This also comes as SoftBank is acquiring that Foxconn, Ohio EV facility that the company bought several years ago when EVs were red hot. Now they're not. What's hot is opening up data centers. So an EV facility is now being sold to SoftBank, and they are going to turn that Ohio facility into a data center, and we'll believe it when it's actually built and it's working. Moving on to Tesla, start of the week at 309 and defying gravity over at Tesla. This darn thing was up 6% this week to finish the week at 330. They landed a key robotaxi license in the great state of Texas, and many believe this is a step towards the company expanding its service, which they've already done. If you looked at the area map that they launched when they were in Austin, Texas, they've actually expanded that to a larger area in Austin, Texas. Now, Austin, Texas is just one area, and you could say actually one small area inside of a giant. I mean, Texas is a giant of a state from just a land perspective. A lot of the population is kind of centered around maybe 3 or 4 areas, but it's a large place. You got Dallas, you got San Antonio, you got Houston, you've got several metropolitan areas where this company could roll out to. And this appears to be maybe the case, or maybe a step in the right direction, as September 1st, this LLC, this Tesla Robotaxi LLC will go into place. And my guess by the end of the year, company will be operating in most of Texas. This as Elon Musk is teasing notable improvements in the full self-driving. He did this on his social media platform X, where he said that it is being trained with 10x more parameters, and it's a big improvement to video compression loss, whatever that means. I certainly use full self-driving every single week. My son and I drive to, he's got an eye appointment every Wednesday, and I'm sitting in traffic. I mean, the appointment is for 45 minutes. And it's an hour and 10. The traffic there is not bad. It's an hour and 10. Sometimes on the way back, it can be literally 2 hours. I mean, it's like a 45-minute drive with no traffic. Sometimes it's 2 hours. Like I live in California, and what's happened in California is crazy. I used to live in like the no traffic area, and San Francisco and LA were a nightmare. Now traffic in LA and San Francisco are not that bad at all, but where I live, because nobody can afford to live there, so they've all moved to where I live, and now I deal with traffic, and it's pissing me off. But full self-driving is a wonderful piece of software that works to a certain degree, so I'll be interested to see how well it has improved when a new version has been released. Now, the company has been using what it's called a Dojo supercomputer. This is its own proprietary chip and supercomputer design that was long touted by the company, and shareholders being bullish the company. They're dismantling that as the head of the team essentially left to form a new startup called Destiny AI. This will require Tesla to likely rely more heavily on other merchant silicon providers, including Nvidia and AMD, probably a nod for those companies to get more business. This all comes as the core automobile business, primarily at Tesla, is falling off a freaking cliff. China-made EV sales fell 8.4%. That's not good. This comes as rivals like NIO and XPeng and others saw their sales actually rise. Same thing happened in Germany. You had a 58% increase in registration of EVs in the great country of Germany, but Tesla's versions of their cars dropping by more than half. Their market share in the United Kingdom fell below 1% as they just sold less than 1,000 units. That was a 60% decline year over year. And what they are seeing is the European market for Chinese electric vehicles, which tend to be a little bit cheaper. And if you see the feature sets, actually pretty darn nice. There's a reason why the United States slapped a 100% tariff on this. In fact, that wasn't President Trump. President Biden slapped a big old tariff on the Chinese EVs because President Biden wasn't dumb. He looked at the EVs and he's like, man, if these came over here, these would decimate the automobile industry. And at least in the meantime, Europeans haven't slapped big tariffs on those. Now, this all comes as Tesla is proving a new restricted stock award for Elon Musk for 96 million shares. Take 96 million and times it by $330. That's a lot of money. Moving over to the technical segment of the show, the S&P 500 just hanging out essentially at all-time high, just a beautiful area where it for at least to hesitate. We saw earlier this year, kind of post the election, you really hovered at the top of the range and just kind of drifted sideways, if not a little bit higher. The S&P 500 certainly could do that. I mean, shoot, you could literally do that for the rest of the year. You could come down here and retest areas at the middle of the channel. What would be great is if we came all the way down to the bottom of the channel. Not exactly sure if that will happen, but in any scenario, you're looking for those opportunities. If it's drift sideways, you're looking for just tactical opportunities, those stocks or those sectors that sell off for whatever reason. You're looking for those tactical opportunities, deeper pullbacks. You're probably going to want to double down in the data center and AI. Moving over to Meta, looking very much like the S&P 500, just hanging out at an all-time highs. Pullbacks to Meta back to 701 is your first opportunity there. Apple, my God, we're on a daily chart and we're skipping candles here. The stock consolidated very tightly for several months and actually gave you a beautiful, beautiful area to buy Apple shares as low as 194 and really up to about 215. So you had about a $20 trading range that lasted for about 2 or 3 months on this stock, maybe even actually a little longer than that. And this is exactly what you hope for with any type of stock that you want to accumulate. You actually don't want these V-shaped recoveries and watch them shoot higher. You want to give, unless you're like Elon Musk and you just got $96 million of shares just awarded to you, that'd be fantastic. If you're like me, you got bills and other stuff that you got to pay. So maybe you're buying chunks of, maybe a stock like Apple that's $200. You might be buying, maybe 10 shares at a time, unless you're just absolutely flush with cash. And so this gave you a beautiful opportunity, blast off right to the middle of the channel. Should have some resistance with Apple at this area. Further higher, my gosh, this looks like it's on a beeline back to the all-time highs at 263. Amazon, a little bit of a double top in the shorter term, but finding some footing here. Pullbacks in Amazon back to 190 would trigger a buying opportunity. A blast higher over and above the all-time highs back up here at 240 could create a breakout opportunity. And when you look at charts of Microsoft and Nvidia, you see what a breakout opportunity is. Netflix pulled back to a very reasonable area right here at about 1140. It's found a bounce, at least temporarily. This still looks absolutely fantastic technically. It'd have been interesting to see if it bounces here and makes a new high, or if this is just a small hesitation, further pull lower, and Netflix can be bought rather aggressively. Here's the breakout trade with Nvidia. The all-time highs were previously at 155, and now when you break to highs, you just have this drift, and we've went from 155 drift all the way to 182. So this is something you want to look for in any type of chart that you're looking at. Another stock that just randomly, Johnson & Johnson. Look at Johnson & Johnson. Traded sideways forever, and then look what you're doing right now. And so in these scenarios, you can actually put on a relatively low risk. We'll put everything in air quotes, particularly in the healthcare industry, because these things have gap. You look at United Health and Eli Lilly, these things can gap and they can go and in the wrong direction. So at Johnson & Johnson, I'd have a stop loss here at like 169 or so. with the idea that we're just going to drift on that one because you just broke to new highs. That's looking really good. I don't know how I slipped Johnson & Johnson in here, but we did. And technically it looks very similar to Nvidia where you're just drifting. Now, Nvidia doesn't report their earnings for about 20 days from now. So that'll be exciting and it'll be a big moment. I'll probably go live that day as well. Google hitting all-time highs also. I know I've got like a lot of lines on here, but you've basically got the same setup as Johnson & Johnson and Nvidia on this one, where you might drift to the highs. Complicating the situation is I think we're expecting that ruling from the DOJ where they might have to divest away from Chrome and those types of things. These things get appealed and it's like, I mean, we're years away from the company actually having to do what the DOJ wants them to do unless Google wants to voluntarily kind of like not appeal and go ahead and go forward with these things. A positive ruling and this thing blast into like, I mean, could get into the 250s, honestly. A bad ruling could get rejected here. No big deal. This is good enough for a confirmation of a new higher high for me. Pullbacks in Google can be purchased. Microsoft also showing another breakout trade. Nvidia showed you Johnson & Johnson very randomly, but the all-time highs were at 460. And look at this. We literally drifted all the way to 550 on this one. We're pulling back here. And in these cases, I mean, this is just in outer space. Pullbacks with Microsoft, even all the way back to 450 wouldn't be crazy. And then finally, Tesla is still in a beautiful uptrend. It's a very long drawn out uptrend. This is multiple years. If you look at the more recent uptrend, this is kind of a 2-year uptrend sitting right in the middle of the channel. Investors just waiting for progress on Robotaxi, waiting for progress on the Optimus robots. The company's vehicle sales have completely fallen off the map. But as you can see, investors don't really care as long as they don't completely go to zero. And there's always the belief that the company is going to be able to remanufacture demand for its vehicles. And I think they could do that in these markets, particularly if it had some creative advertising. The problem is Elon Musk seems hell-bent to not advertise, not have endorsements, not attach the Tesla brand to something else, which I think is a huge mistake, particularly if you go into the Europe and the UK. I think you could reposition the Tesla brand in a number of different ways, whether it's from a economical benefit, it's a safety benefits, it's an environmental thing. You could partner with some celebrities and people that are big in that industry. And I think you could turn things around rather quickly for the company. The fact that they're not doing that is going to slow their progress. Doesn't mean that they won't be able to remake the brand and get it popular again, but it just means it's going to happen over a longer period of time. But right now, technically, nobody cares. Tesla shares sitting right in the middle of the trading range. A rejection lower is a buying opportunity. A move higher is a profit-taking area with Tesla because, again, the uptrend is very wide and very drawn out. So I don't mind taking profits on a stock like this. Folks, that was the FAANG stock recap show for Friday, August 8th. Now that earnings season is over, I'll be able to focus more on publishing some free content for this site. We've just been publishing like earnings video after earnings video over on the Equity Empire Premium site. Information for that is always down in the links down below. Thank you for everybody that has signed up. We had expectations launching this thing back in April, and our expectations were a year from now to be at the subscriber count that we're in. And now here we are, like, what is it? Maybe like 4 months in, and we've already exceeded that. So we're having to reset the expectations and reset everything that we're doing and really focus on it. So it's kind of taken my focus away from kind of the free content and the free stuff that we're able to do here on the public channel, but we'll reset all that. I got my kids going back to school. I'll have more time to devote, and I appreciate all the support that we've gotten over the years, not just on the premium side, but also here on YouTube as well. Thanks very much for being a subscriber, and have a great weekend, a safe one. We'll see you again next week. Good luck with your investments.